know, oh, I think daily time frame shows what the oh that's why I don't like using TradingView back testing because if you go on a higher time frame, it'll print in the future with- compared to what the lower time frame is looking like. So um this is the end of the trading day. But let's say uh let's do fuck it. Let's do 15 minute. 5 minute. No, 15 minute. So all right. So all right. So same process. Whereas previous is high. Well, before I do that, I look to see like when we get close to 9:30, I look to see which market is going to be more favorable to trade. And even though this is hindsight, YM is more favorable to trade because it was the market that displaced more in a sense. And when the market displaces more, you've you've got more of a chance of catching a reversal. So YM, whereas previous days high, here, whereas previous days low, there. So close to 9:30, previous day's high was already taken. 9:30 prints. We've got midnight, 8:30, 9:30. Right? Now let's print relevant swings, relevant breakers. We have one here, consecutive down close candles and price, then CSDs to trade back up from this point. So you can mark this. That's a 5 minute, so we'll make that pink. Next relevant swing. We've got this consecutive down close candles there. Then we have high, low, and then obviously a high. This is a lower time frame. This is a lower time frame fib. I'm not gonna mark it. But let's say 9:30 opens. We see this run up. I see that from this fib, we're hitting 4 standard deviation. With this fib, we're hitting 2 standard deviations. With the previous fibs, it's way out of range and it's extending beyond the fibs. So this tells me that we're in a high premium, right? So of course, if you want, you could chase the move up at 9:30 long, but for me, shorts would be a lot easier because based on the questions that I ask every single day, shorting is better for me to catch a reversal because price has been trending upwards. And when price has been trending upwards, people's stop losses are going to be below relevant swing lows. And the market likes to target people's stop losses. So, how do I enter? I look to see where does a fib or where does a standard deviation end. I've got one here already reaching its extreme. I have one here reaching reversal levels here. And then I have this, the most recent swing low here, printing a lower time frame fib. Actually, let's go on the 1 minute to see if it's clear. It is not, which tells me it's not going to go very far, but I need confirmation. Confirmation for me to take a short is when we have a failure of a PD array, in this case, a fair value gap. We got a 5-minute fair value gap where price fails to push price higher, right? I don't particularly look at OBs, but this is an OB, down close candle, and then we expand upwards after hitting the fair value gap. We have a 5-minute OB failing to push price lower because price comes into it, pushes out, it does not create a new high. And it CSDs to the downside with the closure of this candle. So if I'm not in already up here, I would be here. I would more likely to be in this trade lower here because I don't like how this high is forming. I don't like trading away from highs that look like this. I like trading away from highs that look like this, for example, where you got wicks and it's showing me speed, even though this is not the greatest example, right? I like trading away from highs like this. They're more definitive. So with this type of price action, I'll wait for more confirmation. What's the confirmation? We have 5-minute fair value gap fail. We have 5-minute OB fail. We have 5-minute CSD here. All of this happening after we have this fib reaching maximum extension. We have this fib reaching reversal range. We have previous day expanding the whole day and the day before that as well. Right? So for me, I would enter somewhere in here to then target where this low here, because people who are long, people who have not taken profit yet, people who are waiting for price to continue upwards or maybe have entered here, they have their stop losses here. If they enter down here, they have their stop losses up here to protect profit. I'm more comfortable shorting than longing because I'm above midnight. I'm above 8:30 and 9:30. You see this high? It's very ugly. And all of this movement here, I can't find a lower time frame fib, but I do see clean traffic right here, which would suggest to me that probably this would be a higher time frame fib to go lower, even though this high is not the highest high. but nonetheless, it's clean traffic from here to here. Where does forward standard deviation reach? Where it climbs up a little bit, and then we have another swing point high, so another fib there. And we reach 2 standard deviations where? Here, where this low is, where people who are maybe trying to catch a continuation have their stop losses here. Maybe, maybe not. Whereas 4 standard deviations here. And then we have 5, 6 standard deviations where we start to fill this fair value gap. So that's just a short video, hopefully, of my trading insight. So it's the same thing as the previous video. I'm looking at the same points. Previous day's high, previous day's low, relevant, standard deviation. Am I in premium or discount? If I'm above midnight, I'm going to sell. When do I sell? When a breaker forms. When the breaker forms, print a fib. If I don't like the high, look for more confirmation. What was the confirmation? The PD rates that I look at, fair value gaps. The fair value gap did not make a continuation pattern. The OB did not make a continuation pattern. Then we had a CSD. So out of all those things I said, the fair value gap, the OB, the CSD, price being in premium, 2 relevant standard deviation fibs, those are all those things, those are 6 to 7 things that are telling me to short price and 0 telling me to long price. I've gotten better with my trading once I realized that if I just wait for a couple of things to align, I have a higher probability of being on the right side versus looking at one reaction in the market and then trying to trade it only because I have one piece of evidence. I would be a lot better off if I have 6 to 7 pieces of evidence versus one. And not all the time you're going to get 6 to 7 pieces of evidence based on your trading methodology. But in this example, I had about 6 to 7 things to tell me to go short. Only looking at certain things, time levels, previous day's highs and low, high time frame fair value gaps, and standard deviation. Those are the only things I look at. And that's how I keep my chart clean.